Hi, I'm Yamini Sood from DSP Investment Managers. I head the institutional and family office business for DSP. Eve of Women's Day, let me first wish all the beautiful women out there a very happy Women's Day. We wanted to take this occasion to talk about why financial planning is extremely important for women and not just men. In the last few decades, women have really reached out and they're proving themselves in different arenas when it comes to their careers, when it comes to their aspirations. We talk a lot about women empowerment, but to me, true women empowerment is not possible till the time she is financially empowered, which means to have the ability to make her own financial decisions. That is extremely important. That is why even financial planning becomes extremely important for a woman. Now imagine today when you have to buy a house, when you have to buy groceries, you have to buy furniture for your house, you have to buy 10 different things. Women are always in charge, or women always take part in those decisions. But when it comes to money, they always take a back seat. They always allow the man in the house to do the same. It could be your father, it could be your husband, it could be your elder brother, it could be somebody, but a man in the family. So we feel that it's extremely important for a woman to take that decision herself, and hence financial planning is extremely important for a woman. It's always considered a prime responsibility of a woman to be a caregiver, not just for the child but even for parents when they attain old age. So hence it'll be very helpful if she can develop a corpus, a saving corpus which is invested correctly, so that even if tomorrow, a few years down the line, a working woman has to take a break from her career, she manages the finances well enough to have a steady stream of income coming out of her saved pool of investments. Hence, financial planning becomes extremely important for a woman. So, how should you do this financial planning? Let us take an example of a marriage or an event in your household, an extremely important event. It could be a big ceremony, it could be a puja, it could be anything. How do you go about planning it? You try and find out that, okay, what is it that I really want to do? How grand is the function going to be, how much money I'm willing to spend, how many people I'm going to invite, and what are the kind of things which are required in that event, or whatever that ceremony is. And then that's how you basically break down the entire to-do list and then go about execute. Similarly, in financial planning as well, first you need to understand why are you saving, and what is the reason for saving. And then, if do I need this money over the next 5 years? Do I need this money over the next 10 years? Or I can just invest and forget? Or maybe I need it 1 year down the line. Oh, you know what? I've been eyeing that piece of jewelry. Let me save for it. Or, no, I don't need this money right now. I want to save for my child's education. Hence, it's extremely important to understand your goals and align your different investments based on those goals. What we really do, we are expert in terms of how much money we get, how much money we spend, and then how much money we save at the end of the month. You have to kind of just reverse it when you're doing your financial planning. Maybe decide that this is the percentage that I am going to invest every month. So in financial planning, you actually need to do the reverse and then spend the remaining amount of money. And it's important, like I said, to identify your goals. It's also extremely important to learn the different type of investment vehicles which are available to you. It could be mutual funds, it could be bank deposits, and insurance is not an investment, but it covers your life risk. So that is also extremely essential. So financial planning is not just about investing, but basically it's about covering your entire hedge, providing for your entire lifestyle. And hence it's extremely important that if I cannot understand these things on my own, I should get help from somebody who I can trust. And hence it's extremely important that you get a right kind of an advisor if you cannot do this on your own. Let us talk about the investment options available. One investment option that all of us women understand extremely well, and which has done extremely well for women investors, is gold. But ladies, there is much beyond gold when it comes to investing. And let us talk about a few of the options which are available to you. Another popular option is bank FDs that we all know about. But the option, which is a long-term wealth creator and extremely tax efficient, extremely liquid and transparent vehicle available to all of us, is mutual funds. Even in mutual funds, we have different options, like investing in equity mutual funds, investing in fixed income mutual funds. There are international fund of funds available as investment opportunities. So you can go about investing in all of these vehicles, but you need to be well aware about what you're getting into. So it's important to read about them. Like I said, I cannot emphasize more the importance of having a right advisor. And the beauty of mutual fund investing is that not that it is extremely transparent, as in every month you can see what are the kind of stock holdings that your fund manager is buying. It is also extremely easy, paperless, not at all time consuming, and extremely liquid as an investment vehicle. It also provides tax efficiency if invested for a fairly decent period of time. So, and it also gives you exposure to different asset classes. You must start investing as early as possible. Warren Buffett, one of the world's greatest investors, started investing at 11, and he said he was late and he started late. So you must start as of today if you've not started already. We have to ensure at any point of time that we create an extremely well diversified portfolio. It is important not just to determine your asset allocation, but it's also important to know what's your risk tolerance level, what are your investment goals. It's important to pick up assets, different asset classes for your portfolio depending on all of these, and keep reassessing your weights. And once you do that, it's then you have to monitor your portfolio and also do the desired rebalancing. What do I mean by desired rebalancing? Now, let us you buy 60% of stocks, equity mutual funds in your portfolio, and 40% will be fixed income mutual funds or debt. And then you look at you monitor your portfolio and then rebalance. If your equity weight goes up to 65, 70, you do some amount of profit booking and bring it down, and then add fixed income to it. This is a traditional way of looking at one portfolio. There are other options available. You could do a low correlated portfolio. How can I get low correlation on my overall portfolio? By marrying different asset classes, or by marrying different kind of funds together to provide that low correlation. For example, if I have a 25-25-25 portfolio, which is 25% into equity mutual funds, 25% in fixed income funds, 25% in international funds, and 25% into gold, that will give me a portfolio, an asset allocation, which is again lowly correlated. So at any point of time, you'll have some part of your portfolio which is doing very well. You could have another part of your portfolio which is not doing so well. That's important when you trying to achieve diversification for your overall portfolio.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.